Introduction. NVIDIA, Nasdaq, NVDA, has emerged as a linchpin in the AI revolution, driving innovations across generative AI, autonomous systems, and high-performance computing. The stock has seen tremendous growth, a testament to its leadership position. It has increased by 81.5% over the past year and a remarkable 1,808.98% over 5 years. This analysis provides a comprehensive evaluation of NVDA's investment potential, examining its financial metrics, competitive positioning, risks, and growth catalysts, drawing on data updated on February 2, 2025. This analysis aims to inform investors with a growth-oriented strategy and a long-term perspective. Company overview. NVIDIA, led by CEO Jensen Huang, a visionary in the semiconductor industry, has a management team with deep expertise in AI and GPU technology. Their business model revolves around designing and marketing high-performance GPUs and related software. This includes hardware for data centers, AI research, and automotive applications, supplemented by software and platform solutions like Omniverse, designed to drive recurring revenue streams. Fundamental analysis. 1. Valuation analysis. Price to earnings, PE, ratio. NVDA's PE ratio stands at 46.6x. While this indicates a premium valuation, compared to the broader market, typically between 15x and 25x, this is also reflective of the market's expectation of exceptional future growth, particularly in AI-driven sectors. This high PE implies that investors are paying a significant premium for each dollar of current earnings, increasing sensitivity to any future slowdown in the company's earnings. This is substantially higher than some of its competitors, and this difference should be justified by the future prospects. Price to sales, PS, ratio. At 26.0x, NVDA's PS ratio is significantly higher than the semiconductor industry average, typically around 5x, indicating strong market leadership in high-margin segments such as AI and data center GPUs. However, this also means that the valuation depends heavily on consistent revenue growth. 2. Profitability and efficiency. Gross margin. NVDA boasts a strong gross margin of 75.86%, showcasing its pricing power in GPUs and data center solutions, which allows them to reinvest in R&D. This is far superior to competitors, such as Intel, typically around 35 to 40%, and allows for a substantial buffer for future growth. Net profit margin. NVDA's net profit margin is also impressive at 55.69%, showing a very profitable operation. 3. Financial health. Market cap. NVDA boasts a market capitalization of $2.9 trillion, revenue, TTM. The company's trailing 12-month revenue is $113.27 billion, earnings, TTM. NVDA's trailing 12-month earnings are $63.07 billion. Debt. NVIDIA currently carries relatively low levels of long-term debt, suggesting a strong financial position and the capacity to weather market volatility. Their strong cash flow generation is also important in this regard. 4. Growth analysis. Revenue growth. NVIDIA's revenue has been growing rapidly, driven by strong demand for its GPUs. The key drivers for this are generative AI and data centers. Growth projections. The market generally expects NVIDIA to continue strong growth in revenue and earnings. This is dependent on their ability to remain on the cutting edge of AI innovation. If these growth projections are not met, or slow down substantially, this would have significant impact on the company's valuation. Competitive landscape. Market overview. The high-performance computing market, particularly in AI, is expanding rapidly. 1. NVIDIA is a dominant player, but this attracts intense competition. 2. Competitive analysis. AMD gains in data center market share with its MI300X GPUs. While it cannot currently match NVIDIA's capabilities, its offerings are becoming increasingly competitive. AMD is targeting the same AI markets, often at more competitive price points, which poses a threat to NVIDIA's market share. Intel, entering the AI training market with its Gaudi 3 chips, albeit from a lower base. Intel has the resources to pose a substantial threat to NVIDIA. Our other competitors, Broadcom, Qualcomm, and Texas Instruments, are also competing in related areas, which may impact NVIDIA's business. 3. NVIDIA's moat. NVIDIA's competitive moat is underpinned by its CUDA platform, a software ecosystem for GPU programming that has been a major factor in its industry dominance. The CUDA platform creates significant switching costs for customers and gives the company a significant advantage in attracting new developers and researchers. Their investments in cutting-edge technology and strategic acquisitions further strengthen their position. Growth catalysts. Generative AI. NVIDIA is well positioned to capitalize on the booming generative AI market. They are a leader in providing the hardware necessary for training and deploying large AI models. The ability of NVIDIA to remain on the cutting edge of this innovation is a crucial factor for their future growth prospects. Data centers. NVIDIA is poised to capture a larger share of the growing data center market. The growing demand for computation power in this sector means the demand for high-performance GPUs will only continue to rise. Healthcare AI. NVIDIA is establishing strategic partnerships in AI-driven diagnostics. This can drive significant revenue growth in future, given the potential for AI in healthcare. Autonomous vehicles. The NVIDIA Drive platform positions the company as a key player in the autonomous vehicle market. Success in this area could unlock massive revenue opportunities. Omniverse. Increasing adoption of NVIDIA. Omniverse has the potential to enhance operational efficiencies and create new revenue streams in the industrial AI sector. Risk analysis. 1. Market risks. High valuation. The current valuation could be unsustainable if earnings growth slows or the market changes sentiment. If the expected growth rate does not materialize, it is likely that the stock will be heavily impacted. Overvaluation concerns. Community narratives suggest the stock is overvalued, especially given the valuation from Aswath Damodaran. These concerns may lead to price corrections if expectations are not met. Macroeconomic factors. Geopolitical tensions and a potential global economic slowdown could significantly impact semiconductor demand. This is a systematic risk that would also impact NVIDIA. And high volatility. NVDA's stock price can experience more volatility than the broader market, reflecting the company's growth stock status and dependence on investor sentiment. 2. Company-specific risks. Supply chain. The company's reliance on TSMC for chip fabrication could expose them to significant supply chain disruptions. Potential solutions should be closely evaluated. And customer concentration. A substantial portion of their revenue is derived from large cloud providers. A reduction in their spending could have a major impact on revenue, and strategies to diversify their customer base are important. Insider selling. Significant insider selling over the past 3 months is a potential red flag, suggesting that company insiders may believe that the stock is at a very high level. 3. Technology risks. Increased competition. Chiplets from competitors, AMD, Samsung, Intel, are entering the GPU market at more competitive prices, putting pressure on NVIDIA's pricing power and market share. At customer chip production, major clients like Google and Amazon developing their own chips could impact NVIDIA's market share. And revenue cannibalization. The trend toward generative AI cloud solutions could introduce cannibalization risk if customers shift from hardware purchases to cloud-based AI services. 4. Sentiment risks. High bullish sentiment. High bullish sentiment may increase the risk of a sudden market correction if the overall sentiment shifts. Community narratives. Priced for AI perfection, cracks are emerging. This narrative points to concerns about overvaluation, particularly based on valuation models from Aswath Damodaran. It argues that the current stock price assumes consistent high growth and may not account for potential risks or slowdowns. If the market does not see these expected growth levels, the stock will likely be punished. Omniverse adoption will transform future industrial AI applications. This bullish narrative highlights the potential for revenue growth and margin expansion from strategic expansions in data centers and AI partnerships. This narrative posits that NVIDIA's continued innovation will maintain and grow its competitive advantage. An oversupply of compute power will see margins recede. This narrative suggests that the rapid advancement in GPU performance could lead to a glut of compute power, decreasing prices and impacting profit margins. If this scenario materializes, NVIDIA's profit levels will fall, leading to a decrease in its stock valuation. Enterprise hardware segment to drive sales as AI takes over. This bullish narrative predicts that increased implementation of AI will drive demand for NVIDIA's hardware, and that the DRIVE autonomous vehicle platform will become a substantial revenue driver. This also suggests that NVIDIA will maintain its market leadership as AI adoption increases. Recent news and updates. NVIDIA has a DeepSeek problem. This suggests that a competitor, DeepSeek, could potentially be a significant threat to NVIDIA's dominance in AI processing. This is not well defined, but should be closely monitored by investors. NVIDIA semi-alpha, no more. This implies that NVIDIA may no longer be the undisputed leader in the market, signaling increasing competition from companies like AMD and Intel. This is in contrast to the general perception of the company and could indicate further market corrections. Underappreciated risks facing NVIDIA bulls. This points to underlying risks beyond the immediate bullish sentiment. These risks should be closely monitored to understand if they could materialize into more serious threats to the company's success. Strategic recommendations. Given the high valuation and associated risks, a prudent strategy is required for investors. The stock's growth trajectory is heavily reliant on the continued success of its AI products. Investors should closely monitor revenue contributions from each sector and consider rebalancing portfolios if specific segments underperform or if forecasts are not met. Given the risk and reward profile of NVIDIA, a dollar-cost averaging strategy may be appropriate for investors with a long-term perspective. Those who are more risk-averse may prefer to wait for more attractive entry points. Technical indicators such as EMA crossovers and volume spikes at key price points can also be useful for finding favorable entry points. Investors should be prepared for potentially volatile stock movements, given its status as a growth stock. For those with a lower risk appetite, diversification across a broader range of investments may be more suitable. Conclusion. NVIDIA offers a compelling long-term growth narrative centered on its leadership in AI technologies. However, the current valuation demands a disciplined and risk-aware approach from investors. Investors should conduct thorough due diligence, stay informed about market conditions and company-specific news, and remain prepared for potential market volatility. Diversifying holdings can further mitigate risks associated with high valuations. This analysis has highlighted the growth prospects alongside potential risks, allowing investors to make better informed decisions.